Hi everyone, welcome to this thought leadership piece on revolutionizing African payments. We're here today with Robin, Jurgen, Karel and myself, Bernelle, and we would like to share with you what we're passionate about and what we're dealing with in the challenges of payments in Africa. Robin, let's start with you. Please introduce yourself and tell us a bit about what you do.
Thank you, Bernelle. I'm Robin. I'm a co-founder of African Payment Solutions, and I think how we arrived at founding the company was I was previously with Paygate, which is a South African payment processor, and we discovered that the multinational companies really struggle to get acquired across Africa, and because it's kind of the payment methods are not very interoperable. The international merchants struggle to get acquired across the continent because of different cultures, languages, different countries, and so those challenges associated, with Africa that are not common to places like Europe and America and the more developed countries. And so we set about finding a way to bring it all together in a seamless way with an interface for multinational e-commerce companies to be able to get paid across Africa and to try and facilitate improved trade across the continent. And so it was a lot more challenging than we thought. So it has taken quite a lot of work. But I think every time I hear somebody complain about how difficult it is, I tell them that that is the value proposition that we bring. And really, in terms of our vision, is to try and find a way to make it easy for Africans to participate in the global economy, to be able to trade, and payments is such an important part of that. So our mission is to create frictionless payments a bridge between the consumers in Africa and merchants, multinational merchants, whether they're in Africa or international, to be able to trade kind of non-jurisdictionally almost across the continent.
Okay, thank you. And part of that, that was all very conventional payments focused. And then you started realizing that the crypto sphere introduced more innovative payment rails, and that's where you met Jurgen, correct? So Jurgen, do you want to introduce yourself and what does your company do?
Thanks for having me. My name is Jurgen. I'm from Zargo Technologies, and it was founded in 2016. It was actually founded on the back of a company that I tried to start and unsuccessfully tried to start in 2012, which was a QR code payment system. So what happened to me was I realized that mobile devices and the retailers kind of seamlessly are going to interact with each other. So I thought, like some sort of a connection to a retailer and then making payments, maybe connecting your credit card to a wallet and then making a payment, which is quite, a obvious solution today. But the problem is that what I didn't realize at the time is how the interchange rates work with credit cards, how these things are set by the banks and the Reserve Bank and the regulators. And that it doesn't matter how you skin this product, you're basically always going to add a little bit more friction onto this or another layer. And these payment processes have actually perfected the system, so it's actually quite a good system currently, and trying to add to it is not really going to help. When you look at someone like a ShopRite or a Checkers or a big retailer, for them it's only bottom line. They need to sell a potato for 1 cent less than their competitor. So if you're going to charge 1 cent more for your payment system, they're not going to be competitive. So it's all about cost for them. So if you're not competitive in that space, it's not going to work. So going through that whole journey, we ended up realizing that one way to solve this is possibly using an alternative payment system, i.e. Crypto. So we got funding to build a Bitcoin payment system where you would then enter your phone number into the existing hardware and software at the retailer to do this, but also quickly realized that Bitcoin's not going to be the answer because of the fees and the speed and the volatility and all that kind of jazz. So we then went on to XRP, the Ripple ledger, and was able to do these transactions in the speed what is required at the point of sale. You can imagine when you're at a busy retailer at a checkout counter, you cannot have more than 15 seconds of interacting with a point of sale terminal before you need to get out of there. So, so those are the kind of things that need to be kept into consideration in the whole payment flow. So we got our funding. We started building our proof, not a proof concept, but our actual product, which we then needed to build a wallet system and exchange, because you need to change rands into ZAR, you need to issue ZAR onto the ledger. Then it's just the whole thing. So anyway, it just morphed from there into an exchange and wallet system that can now do cross-border payments, which is, so we started issuing US dollars, euros, pounds, and now South African rands onto the ledger, and now branching into Africa. And with our goal, of course, is a big retailer like ShopRite, for example, has a footprint right over Africa, so we would have to support all those currencies in order to eventually connect to the retailer and then have the funds going in and out of the retail.
Okay, so you're using the payment rails from crypto, so it's not the crypto per se itself. And so, Carl, you worked for Jurgen and you were developing the payments infrastructure, if that's correct. And you are now at the CSR, the Center for Scientific and Industrial Research. Tell us what you're doing there.
Yeah, so I'm a techie and I like solving complex engineering problems, so that's how I also found Robin and Jurgen, because they had some problems that needed solving, and that excites me. So where Jurgen connects to the retailers, some of the software that we built needs to now connect Jurgen's company Zargo to other sources of liquidity around the world. And so everything that I do and touch has to do with crypto or blockchain technology. I try to stay away from the traditional finance technologies. That's not as exciting to me. So part of what we do is to build algorithmic trading robots that spreads liquidity across the world. So we plug in wherever there's a lack of liquidity, and we try to provide as much liquidity there as possible. And it's quite fascinating what you can do with crypto, because you can do because you're working on sub-second systems. So you can do a payment or a transaction. You can do many of them per second, which you cannot really do with conventional finance. So, because you can do that, it opens up a world of possibilities, and that's what we're trying to tap into. At the CSIR, we're using blockchain technologies for several things. We're building so I'm leading a group of engineers and developers there, where we're building products as well inside the metaverse. That's our main thing currently. Is we're looking where we can fit where the interface between the metaverse is and blockchain or distributed ledger technology, and the interface is also in payments. So we're processing payments there also multiple times per second for users and merchants and vendors that's looking for a foothold inside the metaverse and looking to expand their conventional business activities to the metaverse. We're providing them with the infrastructure to process those payments, as well as an identity layer. And then we're also looking at the regulatory side of that, because as you can imagine, those bring many challenges to regulators. They don't always know, what this space means and how to fit it into conventional regulations. And what we're trying to show them is that you can actually automate many of the many of the compliance functions that you get in conventional regulation. And if you treat this technology right, then you get much better compliance. Then you get much better investigations, much more accurate, much faster. So this is nothing to be afraid of. It's just about getting the right tools in place and the right technologies for the regulator, so that they can sleep sound at night, and then let the industry flourish.
Well, thanks, Carl. So just to introduce me, my name is Bernelle, and we're working on a so-called metaverse product, or a virtual world or virtual platform, to allow people to have geographically independent lives. And that does not mean illegal. It still means fully regulated and fully legal, but working to have better governance and better democracy and better opportunities and access for everyone, doesn't matter where you come from. And so that includes e-commerce payments, but also data, what happens to your data ownership, what happens to the services that you deliver, can you get paid on time, can you supplement your life to have a better life. And so this is very interesting to me because I think payments and finance is core to how people trade and work. And it shouldn't matter where you are in the world to have a good experience globally. So thanks, everyone. So I think something that keeps recurring is this idea of legality and regulation. And Jürgen, last time when we spoke, you gave us some insight about what that means. Like, people are very afraid of crypto and think that it's this weird thing, but it's not really about crypto. It's about capital flight and liquidity. Can you tell us a bit more about that?
Yeah, so actually we've been working quite hard with the regulators for the last few years. We took the stance that as long as this crypto or this product is unregulated, you'll always be an outlier. You'll always be just working with the fringe players. Where what regulatory certainty brings is also big corporates, big institutions that can now interact with the system, and that, in all honesty, is where the real money lies. So if you really want the system to be a real payments network around the world, regulation needs to form part of that. So we've always taken it from that standpoint, and therefore have engaged quite heavily with the regulators. So we were fortunate to be included into a sandbox with our South African Reserve Bank, and we were able to test. It's actually quite interesting. So a lot of people don't know like what happens in a sandbox, right? It's like I had one person say to me, "Oh, you're going to do a transaction, they're going to scrutinize it." But that wasn't at all what it was like. It was actually a really good process. For us, it was over 1.5 years long. And we had bi-monthly meetings. And what we did was we did screen sharing. We did a lot of data sharing, a lot of opinions from how they saw things, how we saw things. A lot of people said to us, maybe we've influenced the regulation somehow. And I always say, well, we didn't, because whatever they were telling me right in the beginning, it's still today the same. I don't think they have changed anything. I think they have a pretty clear idea of how they see things going forward. And we actually find it quite interesting to see that a lot of people in the industry want to engage with the regulator to, I don't know, change their mind or have a different place of reporting, and we're like, once you've engaged with the regulators, you actually understand how they view these things. They're not viewing this as a threat. What they're viewing is they're saying, how can we make sense of this and not give the banks an unfair advantage or crypto company an unfair advantage that the regulation needs to encompass to such a degree that everybody has a level playing field. And at the moment, we're sitting in a situation where banks have an unfair advantage because they can deal with regulated entities or sort of in a regulated space and move money across borders. Crypto has an unfair advantage because it's working in an unregulated space with not a lot of viewing going on. There's a lot of different types of movements going on there. So it's bringing these two together so that they are actually in the same playing field. And you can't have a situation where a bank is not allowed to do a certain transaction, but a crypto company is, or a crypto company isn't allowed to do a certain transaction when a bank is. And that is really where they are trying to get to a place where everybody just has that level playing field.
And improving the technology that underpins it to make it more efficient and more competitive for everyone involved, and protecting the consumer, because at the end of the day, we need to deliver a good product and not soft our consumers. Carl, you mentioned something about that this blockchain technology can also be used to help with this regulation. Is that through something called smart contracts? You want to talk more about that?
Yeah, I think smart contracts also play a role, but I think it's more related to the transparency of many of these blockchains, and that they are completely permissionless. and transparent, open for the entire world to view. So if you look at historical precedent, then you'll notice that very few criminals, if any of the big ones, has ever actually gotten away with illicit behavior using this blockchain activity. So, in short, if you want to do something illegal, don't use Bitcoin. That's quite a bad idea. Because you'll get caught quite easily. So but that's some of the more advanced economies like in the West that has these tools and infrastructure already implemented to track and trace this illicit behavior. So that's I would really love to see that South Africa also builds this technology. Because it like Jurgen also says. It levels the playing field. It puts the crypto asset service provider companies that's plugged into this technology locally. It gives them a clear way forward and knows and lets them know clearly where their boundaries are and what they're allowed to do and what not. We've seen in every industry that if the regulations are clear, if the policy is good and implemented as it was designed to work, then that particular industry flourishes. So and the tools exist, the technology exists. The tools doesn't exist locally, but I mean the technology allows for the tools to be built, and that's the wonderful thing about this.
Great, thank you. So Ron, you're quite the visionary. Where do you want to see this go in the coming months and years?
Yeah, I do live in that world, but I mean, I always come from championing, because our customer is the merchant, the multinational merchant who's trading, and then their customer is the consumer. So I'm always thinking and championing how can this happen, and I'm an African, so I want it to happen in Africa. It's like the last outpost. We have the opportunity to completely cut through everything, to completely revolutionize. Everybody else in the rest of the world is kind of, everything works. It works well enough. So, what do we need to do with this thing? Whereas in Africa, I wouldn't say it's broken, but it's a fragmented system, and it's got so much possibility and so much opportunity. And Africans are so enthusiastic about life, and they make a plan to get things going and to make them work and whatever. And so I see it like, as we champion this bringing together of the consumer and the merchant, we leverage the technologies that can now bring it into not necessarily a non-jurisdictional environment, but a layer where there's a transactional layer, which is ubiquitous, which is possibly cross-continent. And so us in our old traditional fiat world, we are on and off ramps to a digital world. And so we bring our old technology, or our old way of doing things. Our technology is not old, actually. We have brand new Amazon cloud hosted everything. But the fiat world to the digital world, how do we do that? And that's how we're starting to cooperate to bring these, like with Jurgen, we are working out how to move money around way quicker. I mean, to send a payment from Kenya to Nigeria, South Africa, whatever, it takes time, it costs a lot of money. And he started to build these rails across the continent. But he's like a kind of wholesaler. So he works for the banks. And so they're in the background there. I'm at the front with these consumers and these merchants, these business people that are wanting to trade. And so how do we bring this technology together? And then as Carl starts to develop some of his custodian, making it easier to keep custody of your digital money, because at the moment it's still quite challenging to look after your digital money. I mean, I've done a master's in digital currency. I've been in it since 2017. And to be honest, I'm still not very good at looking after my money. So it's really hard with this, private key, and got to keep it somewhere and make sure you don't have a fire. And anyway, whatever it is. So with Carl making it easy to look after your money, Jurgen being able to whiz it around economically, effectively, and cross-currency, and us to be able to sit in the middle of this and interface that between the consumer and the merchant would be fantastic. And then, Bernelle, what you're doing is you taking all of us to that next level where we're going to live in this virtual environment. And you'll need to explain it because I don't understand it quite as well as you do, even though I've been doing it with you for 2 years. But creating this place that people can be, trade, and buy things and sell things and pay and get paid, just so that everybody becomes so much more free in the way that they can operate and not so bogged down by the bigger institutional legacy systems. So yeah, that's my wish for it, is to, as I said, frictionless payments, to lubricate the wheels of e-commerce and trade across Africa.
Yeah. And Jurgen, did you not say something about peer-to-peer trading is the real honeypot? Well, I don't know if honeypot's the right word. The real gold mine last time. Did you mention something like that?
I can't remember saying anything like that, but I think from a peer-to-peer trading perspective, is that's actually a really difficult question, because I do believe that people are struggling, to Robin's point, managing their private keys, managing their passwords. I mean, I just looked at the other day, I lost my phone and I lost my GitLab 2FA code, and now I have to, like, it's this mission to get it reset, and it's a problem. So there is an advantage to have a centralized system to manage these keys for you. It's like I do feel comfort when I have my money at Absa Bank. I for some reason feel that they are looking after it, and not everybody would agree with me on that. But so sometimes I feel like using the right institutions, it is okay to leave your crypto there. But there is so many instances where people have lost so much money by putting their funds in the wrong wallets. And DeFi or peer-to-peer trading, like what you're referring to here, is absolutely it's an absolute wild west at the moment, because you don't actually know what's on the other side. So one thing, what regulation is bringing, and this is actually a very important part of the regulation that a lot of people miss. There's something called the travel rule. And the travel rule, in order to prevent money laundering and anti-terrorist funding, is they need to know, the regulator, or you need to know, what is the source of the funds, who's the source of the funds, and who's the destination of these funds. Okay, so if you're a bank, you need to know, where did I transfer my funds from, and who was the recipient, or the other way around. Now, that is a regulatory obligation to a bank. So currently, that's not an obligation to a crypto exchange. And so from that perspective, a crypto exchange is a massive advantage. They don't have to do all this regulatory bits. And that is actually incorrect. So the travel rules now starting to enforce this across the world, and saying that even if you're sending crypto from one person to the next, that you need to know who the recipient is, and you need to know who the originator is. And because of that, things are going to get very murky when you start trading in the DeFi space. Because you're gonna, I might be buying crypto on this DeFi exchange from 10 different people all across the world. It's fragmented. I don't actually know where these funds are coming from. So how do I even know that 10% of my funds is not money laundered? And from that perspective, I think the DeFi space is going to have a lot of work to do still.
So I take your point, and I think there's still a lot of ambiguity in terms of what we mean with peer-to-peer. I don't necessarily mean it's anonymous or murky, but something that is efficient enough so that people can use it without, because I think the poor get shafted. Like, individuals struggle to move money around, whereas if you're really rich or you're really big, it's easier. And there's reasons for that. So interesting, what I've learned over the past couple of weeks and months is there's different ways of decentralizing, and some are better than others. And there's decentralizing that requires a universal trust, which is very heavy and perhaps
not that easy to regulate or whatever. And I think Carl knows a lot more there. But then there's also what we call a web of trust and a subsidiarity way of working, which is just appropriate levels of governance and appropriate levels of decentralization, rather than having a black or white. It's either decentral or central. And so I think it's going to be interesting to see how that develops. I don't know, Carl, if you've got input there, if you want to share.
Yeah, I do. I was actually just looking for a paper wallet, so I found one. There's a little private key, so there's probably money on this one. So whoever scans the private key there is can have the money. But this is just how fascinating crypto is. Is the fact that you can put $1 billion on this, even more if you
I
like.
hope you didn't, because we're going to scan it straight away.
And and it's on a piece of paper, so I can put this in my pocket, and then I have $1 billion in my pocket. Now that's powerful, right? That's incredibly powerful. The problem is if I lose the paper, then the $1 billion is lost forever. So you are fully self-sovereign. You don't trust anyone, as you mentioned, Bernelle. There's many vectors, trust vectors in this technology, and it's a complete spectrum. You get everything from complete trust into shady individuals to completely self-sovereign, where you only trust yourself. And while I was looking for the wallet, I actually found my $10 trillion note as well. So this is the other cool thing about this technology, is that we have predictable monetary policy, and this is the main source of my fight on Twitter these days. Is with skeptics of this technology who question the value that it brings to the world, and I think that this is proof of the value that it brings to the world. Part of it, I mean, payments is one. Payments is the one that we're discussing today. It's the ability to seamlessly move value using crypto as a rail, and the other is predictable monetary policy, and which is one of the reasons why we in South Africa prefer to buy Bitcoin, because even though it's extremely volatile, it is still a much better store of value than, for instance, our neighbor country currency. But as Robin mentioned, custody is a major problem. And custody is a problem exactly because of this, or because there's no one to phone if I lose this piece of paper with the money on. Like, there's no call center, there's no company behind it, there's no board of directors who can just reverse the transaction. Now, it's more than that. It's more than just losing access to your keys. It's also protecting against rogue actors. So if you're an institution and you have a large amount of exposure to cryptocurrency, for instance, usually as an institution, when you're at a bank, you are protected against rogue actors. The CEO just cannot just completely withdraw the company account. There's layers of protection, preventing that. And if he does manage to do that, then you just, someone can just call up the bank, and the bank can freeze the account or reverse the transaction. Now, that kind of protection is not available on cryptocurrency, or not yet. I mean, it's an incredibly complex engineering problem to enable that in a trustless way, like without centralizing to a trusted third party. So, it's a fascinating problem, something that I love to work on. And something we are also exploring at the CSIR.
That's very interesting, and I think what fascinates me about crypto and just all this financial technology in general is how it's decoupling and forcing us to understand better all the functions of money and finance and policy. Money is not just a store of value; it's also a method of exchange, and that's really interesting. I struggle to understand that. I think closing round, what would you like people to take away from this conversation? Why should they watch this? What would you want them to take away? Robin, should we start with you again?
No, I'll give it a bash. I think the one thing is that I'd like people to know that we're working on this. Mm-hmm. So that because it is incredibly frustrating for people to do business across Africa, consumers and merchants, and banks for Jürgen and Karel and governments. So just to know that we are working on this, and I think what's really cool in this room is that this is bank government friendly, actually, which is super cool because I think crypto's got a really bad name generally for not cooperating well with the government. I think that's the fringe, as Karel was saying. And so I'd like to know, like our target markets, to know that we are working on this. So in Jürgen's case, it might be banks and large money movers. In our case, it's merchants and consumers, multinational merchants and consumers. Karel, I'm not sure what your market is. You can explain what that is, but I'd just like them to know that we are working on this. And I think what's incredible is the four of us are actually working together on this, and it's pretty incredible what we are building. We're building a whole new system, and it's just mere mortals like us that are getting our hands dirty. We're starting to understand. We understand legacy. We understand crypto, digital, blockchain, and so we're starting to bring these elements together in a transitional manner. And just to say to our target market that there's some really cool stuff coming out. I mean, the things we're doing to be able to move money, like we get them. First of all, we can accept crypto at the checkout. So if somebody does have digital assets, they can pay at the checkout. We are starting to make it operable in our wallet and to be able to move that money around. And that's using you guys' technologies, using Karel's experience, using Jürgen's technology. Karel, one of your ventures that you're involved in too, we're bringing that together. And then also for merchants to know, or our target market to know, that we have Bernelle, where you are forging the future. Because I'm 62, it's really quite a leap for me to move from the physical world to the virtual world. I've managed to transition from fiat to crypto, and so I really understand that really, really well now. We've still got smart contracts and things coming, but let's just go slowly. We'll get these functioning. So I'd just like to know people to know that we are forging new pathways with more cost-effective, more effective ways of being able to get you paid across Africa. That would be my message today.
Thanks, Brian. Well said. Jürgen, what do you?
Yeah, I don't really know what a closing message is. I would like to reiterate what Robin says, is that what's actually interesting is most of the bigger companies in crypto are crypto exchanges. And it's interesting if you think about it, because everyone that's trying to build a payment system or trying to build some sort of a different product on it, they seem to fall away after a while. It's a very difficult problem to solve. So the very reason for crypto to start with is not just a monetary gambling, I'm going to get rich quick scheme and 100x my Luna tomorrow. Is actually, it was supposed to be a peer-to-peer payment network. And it hasn't always fulfilled that purpose. And when I say that, for example, to Sonia, which is my wife, she runs the Crypto Fest Blockchain Africa conference, she says to me, I'm wrong. They get paid in Bitcoin and Ether and USDC for their sponsorships. So it has fulfilled a payment function, just not always the way people have perceived it to be. So people see payments only as I'm paying a retailer, or people say I'm paying, my gardener. But those are different payment methods. It has created an entire new network of payment, a new payment infrastructure, and it's now growing to a point where there's enough on and off ramps, there's enough liquidity, there's enough institutional demand for this to start becoming a real payment network that you can go on and off, in and out as you wish. But it's not there yet. That's all I can say. There's still a lot of work to go, a a lot of steps before it will be the full-fledged network.
Well, thanks, Jurgen. That reminds me that the biggest transaction volumes, not value-wise, but the volumes is in Africa of Bitcoin, because people have no other option. And so for them, it's really a lifeline. And during the pandemic, people thought that there were people that were going to starve to death because they just can't get the money out, because they can't travel, they can't go to the bank branches. And that didn't happen. And that didn't happen because of the Bitcoin and the crypto payment rails. And so that's a real lifesaver. And so I think there's a lot that's going on underneath that we miss out on when we just discount the whole thing as a speculative venture. So that's very exciting. Carl, any closing thoughts from you?
I think my closing thoughts are, whether you are an individual or a business owner or an employee or whatever your role is in this world, however you make ends meet, is to be curious about this technology and stay curious. If you want to know, I can recommend looking into the world of finance, and you'll be shocked at how broken things are. And then you will probably, and then after that, you'll probably discover blockchain technology, crypto, and then see that this is a lifeline, as Jurgen also mentioned, and that this is there's light at the end of the tunnel. And it's fascinating, and you will get hooked at some point or another, like all of us have. And personally, my personal goals are just to stay busy, and if I can stay as busy as I am, immersed in this technology for the rest of my life, then I would be extremely satisfied. It's been such a privilege to work with all three of you, Robin, Jurgen, solving the engineering problems, and Bernelle leading the thoughts, or participating in the thought leadership, and advancing that. So yeah, thank you. It's been a massive privilege.
Oh, thanks, Carl. And I think from my side, so there's a lot of things out here that I think is amazing, and then we have the potential of it being, if not abused, then at least like ring fenced through private companies. People are terrified if you think that Facebook is going to rule the world. But we can also do this completely open and with government and well regulated. And so that's what we're working on in our project, so that it's fully open, it's free and open source, it's volunteer driven project, which means that if you want it to be a good thing, then you can contribute to getting it there. And so it's not good enough to just be bitter about it. There's so much out there, and the whole ideology of blockchain and open source has this decentral, people first objective. And I think people need to remember that. So that's my closing message. Right.
Brilliant.
Thank you, everyone.